Welcome back, everyone, to the first Committee Pensions Board of 2026 here at the Grangemouth Community Education Unit. It's good you could all attend today, knowing how everybody's got busy schedules, and being able to contribute for your colleagues and members is a very important part, as we all know, of the employment contract. Please note, this committee will be live streamed. People are watching online, and you can find the committee video later on the Falkirk Council YouTube committees. Today we've got 13 items on the agenda, and agenda item 11 we'll have at that point, if people want, we can have a short break. We will have a short break, as a matter of fact. Also, agenda item 11, I will mention why we have the exclusion to the public, to the members of the public that are viewing our committee today. That is important. So I'm now going to start formal business now. Thank you. Do we have any apologies, Mr. Peary?
Yes, we do. Apologies from Councillor Sinclair and from Helen Welsh.
Thank you. And now we go to agenda item 2, which is declarations of interest. Members should declare any financial and non-financial interest they have in any item of the business today, identifying the relevant agenda item and the nature of the interest. Do we have any declarations of interest? I don't see any lights on. So we'll move further on to agenda item 3, which is the minute of the meeting of the Pensions Committee and Board held on the 18th of November. I'll just give you a minute. I assume that maybe everybody's read the minute before they've come to the meeting today. Okay. Is there any matters arising from the minute? I don't see any hands up. So can we agree the minutes then?
Agreed.
Thank you. Next item, agenda item 4, is the rolling action log. If you could have a wee look at that, and that's pages 12 to 13 in your papers. Do we have any comments on the rolling action log or questions? I don't see any hands up. Oh, Councillor Spears, I beg your pardon.
Thank you, Convener. Page 13, the request that the Chief Finance Officer procure financial, legal and investment advice on the implications, practicalities of implementing a policy which excludes controversial and offensive-only weapons from the fund's investment. As you know, things have moved on quite dramatically since, in my opinion, that wrong decision was made. Can we get an update then on what exactly is happening in detail? Because, and maybe it should come back as an agenda item, because our country's in quite a difficult situation, as is the world.
Thank you, Convener. Thanks, Councillor Spears. It wouldn't be appropriate for me to give a detailed update at this point, because the rolling action log is flagging that a detailed report will come to the June Pensions Committee. That work's ongoing now. It's not completed yet. So I think we would just have to stick with our plan to bring something back in June. There has been a significant amount of work done with ISIO, our advisor on this piece of work. I think, though, we have to also recognise what Barry was saying, Barry Mackay from the Actuary, which is just that, you know, we are a long-term pension fund, so any decisions we take can't be in immediate response to what's happening round about us. We have to take that long-term view. But we'll stick with our plan to bring the paper back in June.
The thing is, Councillor Spears, the report is coming back in June, and we'll have to wait until that comes back. And I do believe it'll be a very thorough and detailed report. And at that time, if you have questions, but I do take your point, the world has changed greatly since the last time we've been discussing that. And I think everybody in the room and online is very aware of that. But thank you for your question. As I say, a report will come back and you'll get your chance then. Thank you. Now going to move on to agenda item 5, which is the external audit, annual audit plan, and that will be taken by Pauline Gillen. Thank you.
Thank you, Convener. Good morning, everyone. The paper I'm bringing to you this morning is our annual audit plan for the 25-26 audit. The plan is in a similar format to that which members will have seen in previous years, but still just a couple of things I'd like to bring to your attention this morning. At paragraph 5 of the plan, we outline the scope of the audit work, which is in line with the Code of Audit Practice and relevant accounting and auditing standards. You'll see there that as well as the audit of the annual report and accounts themselves, we also cover 4 wider scope areas and arrangements in place for best value in line with the wider scope of public sector audit in Scotland. And you'll see there those bullet points, we outline the work that we will do this year on the audit. The next thing to draw to your attention is Exhibit 1 of the plan, our materiality levels for the audit this year. In line with previous years, we use a benchmark of 2% of net assets, and we use last year's audited accounts to calculate that. So we have an overall materiality level of £71 million. We also calculate a lower performance materiality level. Essentially, that acts as a trigger point. So if during the course of the audit, we identify errors or misstatements that start to approach that level, that £50 million, we would take a step back and consider whether we need to undertake any additional audit procedures to provide ourselves with assurance that we're not going to breach the overall materiality level. We also have £3.5 million, which is our reporting threshold. So that's the level at which I would report back to this committee in the annual audit report any errors or misstatements that appear in the accounts. As part of our annual planning and risk assessment work, we understand and report the significant risks of material misstatement that may exist in the accounts. And you'll see there that we have 2 significant risks. Again, those are standard risks that you'll have seen in previous annual audit plans. The first of those is a standard risk that we're required to consider in the international auditing standards. And essentially that relates to the unique position that management are in to override financial controls. Therefore, we have a risk of fraud caused by management override of controls. And you'll see there that we have a range of planned audit procedures that we'll carry out during the year to provide assurance that there hasn't been any instances of those controls being overridden, and we will report on that in our annual audit report at the conclusion of the audit. We also have a second significant risk there, which is, again, a standard risk that you'll see in the annual audit plans of all pension funds, and it just relates to the significant degree of subjectivity and assumption involved in the measurement of the pension fund's investment assets, specifically level 2 and level 3 investments. And again, you'll see there's a host of procedures that we carry out to provide ourselves with assurances over the year-end values that are in the accounts. And again, we'll report on those findings in our annual audit report. The next section of the plan covers wider scope and best value, and you'll see there, you'll be familiar with those 4 areas of wider scope audit and public sector audit in Scotland. We will cover all 4 of those as part of the audit and report on arrangements in place for those in our annual audit report in the conclusion of the audit. And you'll see we also cover best value. However, pension funds are not local authorities or separate bodies that require a separate best value audit. Therefore, we consider the arrangements in place at Falkirk Council as the administering local authority. And we haven't identified any significant risks in any of these areas for this year. So finally, at Exhibit 3, the last section is on the timetable. And you'll see there that we have listed the key dates for the audit for this year, with our intention to sign off by the end of September, which is a statutory deadline for local authority and pension fund audits. And I anticipate bringing the final annual audit report back to this committee on the 24th of September. That was all I wanted to say on the plan, but I'm happy to take any questions or comments members may have. Thank you.
Thank you, Ms Gillen. I'll open it up. I don't know if any of our officers want to speak at this point. No. No. I'll open it up for any questions. Nope. I don't see any lights on. Right, thank you. So we're now going to the recommendation. So the committee and board are asked to note the annual audit plan proposed by Audit Scotland here today in relation to the audit of the pension fund annual report and accounts for 25-26. So do we agree that recommendation? Thank you so much. Now we're going to move swiftly again on to agenda item 6, and that's the pension fund governance and compliance statement. And that will be taken by Catherine Crothers, our pension fund manager.
Thank you, convener. The regulations governing the local government pension scheme require the fund to formulate and publish its policy and its compliance with the Scotland Governance Compliance Statement Guidance, which was issued in April 2011. While none of the conditions set out in paragraphs 3.3.2 to 3.3.5 of this report have triggered a review of the compliance statement, we needed to reflect how the change to the governance structure within the pension section was reflected in the fund's documented governance arrangements. It is also good practice to review the compliance statement on an annual basis before it is included in the fund's annual report and accounts to ensure it remains current and incorporates any best practice developments. I'm happy to take any questions, but just to confirm, there are no material changes and no delegations have changed.
Okay, do we have any questions at all? Councillor Spears, you have a question, thank you.
The council plan priorities supporting stronger and healthier communities. Do we still comply when we'll close some sports centres, especially the recreation centre in Bowness? So can we say that this is still an objective when we've been instrumental in places closing?
If maybe I can answer that for you, Councillor Spears. This section is not applicable to the pension fund. It's actually put into the report, but we don't look at all these sections of this with the pension fund because it's viewed differently. Hope that answers the question for you. Thank you. So if we've not got any more questions, I'll go to recommendations again. It's recommended that the Pensions Committee approve the governance policy and compliance statement. Do we all agree? Thank you so much. We're going to move on now to agenda item 7, and it's the pension fund business plan. And that will be taken by Debbie McRae. Thank you.
Thank you, convener. I will cover the investment and accounting side of the business plan. So as noted at the last meeting, various procurements were underway. The focus in the last quarter has been joint procurements with our collaborative partners, Lothian and Fife pension funds, which reduces cost and resource spent on these exercises for all the funds. The custody tender concluded with the planned reappointment of the incumbent custodian Northern Trust, with final contracting negotiations still ongoing. The voting and engagement tender also concluded, and this will see the change of provider for the service. However, at this stage, the final signing off of the contract hasn't been confirmed yet due to final discussions on terms and conditions, and also because it's in the middle of voting season. So I think at this stage, I've been on holiday, so I'm just catching up on the updates, but at this stage we are looking to do a short extension with our previous provider and then move forward with the new provider in a month or two, just to allow a little leeway to get all the T's crossed and the I's dotted. A further joint procurement is underway to appoint an investment consultant to look at the strategic asset allocation as part of the triennial valuation. And as noted at the last meeting, we'll also be looking to procure specialist legal services for investments and benefits. On the training front, I hope that those of you who attended the training on the reappointed custodian and the fixed income responsible investment and housing training found it informative. Training on the new voting and engagement provider is to be confirmed. I think looking up very quickly at my emails, it is looking like the 25th of May, but we'll have that confirmed to everybody, and that will be joint with Fife, and I'm not sure about Lothian. And later in the year, the Scottish LGPS funds plan to carry out general board and committee training as something that was done a few years ago. The accounts and investment team are carrying some vacancies which we hope to fill over the coming months, and the report also mentions a couple of areas that accounts and investment hope to look at once more resource is in place, so cash flow modelling and employer covenant modelling. That's the majority of things from me, so I'll hand over to Catherine.
Thank you, Debbie. And picking up where Debbie left off, I'm actually going to pick up from the point where she was talking about the training and build a bit more onto that, because as you know, I'll know it's now a requirement for the fund to report on the training undertaken throughout the year by each member of the committee and board. So I've updated the log to show the training undertaken to the end of February. If you see any discrepancies, I will come on to one in a moment, but if you see any discrepancies or I've not captured your training correctly, please contact me and I will make that amendment. There is one error, and that is in the summing of the training undertaken by Tony Caleri. That total should read 9.25 hours and not half an hour. And this brings in a very important point. If you do any extra training that's not organised by the fund, such as the Regulators Toolkit or a module on Enlighten, could you please let me know, drop me an email, give me a brief outline of the training you've taken and how long you spent doing it, and I will make sure that that is captured for the log. And on the training, I'd like to say a big thank you to everyone who completed the knowledge assessment. There was 100% response rate from the members of the board, and just under 50% of the committee completed the knowledge assessment. The good news was the overall average score was a very healthy 77%, indicating good knowledge levels across the board. There was one interesting question which nobody got right, which did surprise me, because the paper actually was presented at the last meeting, and that was when is the outturn, projected outturn for the fund presented, and it's always the last calendar month, the last calendar month meeting in the year, so November, December. So that's a takeaway for everybody, but it was an interesting one, but nobody got it right, absolutely nobody. So moving on to the key projects the fund is currently working on. Progress on the McLeod project does remain slow. However, we have appointed an extra team member to join the team, so we would expect that to pick up over the coming months. With regard to the pensions dashboard, we have now moved to the stage where we are working with our partner funds in Scotland to establish best practice to ensure our statutory service levels can be maintained when we open up to the public and we're having to answer public inquiries. Separate to the pensions dashboard is our own members portal. And I'm pleased to say that the migration from the old portal to the new one was successful, it's complete, and we now have two-factor authentication in place, which provides our members with better security around their data. I can't, sorry Debbie, I can't actually remember, but she mentioned about the fund's triennial valuation, but it's just to say that that is now moving at pace and we are looking at the data that needs to be provided. The National Fraud Initiative is ongoing. It doesn't sound great when I say we've recovered £416 out of 14,000, but actually that's not bad. We have identified 2 spouses where we would expect to pay a survivor's pension to, but we are having to try and track those people down so that we can get their pensions into payment, and that is taking time. So that also reduces the amount of overpayment because we would expect to pay a spouse's pension, so we would be able to recover any overpayment made. The data cut for the next NFI exercise will take place towards the end of this year, and it's going to be expanded to include dependents who are in receipt of a survivor's pension. As Debbie does, I also have vacancies on my team. And to be honest, we are in no different position than other funds within the UK. It's difficult trying to recruit experienced administrators. Because of those difficulties, we're having to take a kind of like a step out and look at it differently. And how can we bridge this gap? Because we really cannot, we've tried, we cannot recruit experienced administrators. So what we've decided to do is grow our own. And we've also looked at the administrator roles to see, are there jobs we could, are there sufficient jobs we can take away to create a clerical assistant post, because we've not had problems filling that post in the past. And we've identified enough work that we could pull together to create a clerical assistant post. So that is our long-term aim. We're going to also use agency to help us broaden that field to recruit experienced administrators. The problem really is defined benefit, which is what the local government pension scheme is really closed apart from public sector. So there are not many people trained on defined benefit schemes. So that immediately reduces your pool and your ability to bring people in. The revised structure for the team is shown in the appendix to the actual business plan. So the final one is an exciting one. You'll all be happy to know you're going to be one less report now going forward, and that's because with the new format of the committee reports, we've taken this opportunity to wrap the general governance into that final section of the business plan. And the first of the general governance matters to be considered is the scheme regulation amendments that were consulted on last year. We have been advised that will likely, that they need to do some further technical consultation to make sure policy intent is delivered. So there's likely to be a further consultation. That's likely to be towards the end of the year, because they're also talking about bringing in a consultation about how things like normal minimum pension age will work in the LGPS. So details of these amendments can be found in sections 5.1 and 5.2 of the business plan. And that's me finished, and I'm sure Debbie and I will be happy to take any questions.
So I'm going to open it up for questions. You could ask your question. Thank you.
Thank you. Thanks for that. So a comment and 2 questions, if I may. So yeah, I think your approach to recruitment and how you're structuring that, given the challenges, is the right one. So I think that's sensible to do that. But first question was, clearly we're doing more or it appears we're doing more with Lothian Pension Fund, be it joint training, joint initiatives, different things for saving monies, which seems sensible. I just wondered, how far will that go? How far can that go? What delegated authority do you have as officer? At what point does that need agreement of the committee? How far can you take that joint working at the moment to save monies, and at what point, and what do you need to then bring back? And the second question was just on the cash flow modelling paragraph 5.5.1. Could somebody unpack that a little more? I'm not quite sure what it means as the fund is maturing, which sounds like it's ending. It approaches a tipping point where it moves into cash flow negative situation. If somebody could just unpack that as well, please. Thank you, convener.
Thank you, Mr. Whitty. Catherine, do you want to take that?
I'll
tell you what. I'll take the cash flow modelling one first. Oh, you're back. Right. No, no.
We're both on. Yeah, okay. So I'm going to cover the agreement on the training side of things first. Training is something that is organised by officers, and pensions committee can and board can choose whether or not they attend a training session, but the training will be organised by officers. If pension committee or board members want training in a specific area, I know we've had a request for a gender pensions gap, which we will try and find a slot where we can slip that in, then we can build that into the training that we organise. But it's done through the officer group for Scotland, which also includes Northern Ireland. And it is that investment governance group that will agree the training, but it is, we're all one scheme, so it is suitable for every fund.
I'll cover off the cash flow modelling and then maybe start on the relationship with Lothian, and Amanda can jump in. But on the cash flow modelling front, what we are thinking about is the fund maturing. Okay, it's a very long term, as we've discussed, but it is getting to the stage where we're paying out more to pensioners than we're actually getting in contributions. So that's what we mean about maturing part. So as that happens and we're not getting as much in as we're paying out, we then need to maybe look at cash flow modelling a bit closer. At this stage, we've got plenty of cash resources that are there to cover us when we need it, and we're not needing to pull on that too regularly. But we're aware that over time that gap will become a bit bigger, and obviously that will depend on how contribution rates change or move at the triennial valuation. So we're just planning for that to be something that we need to spend a bit more detail on. On the joint work with Lothian and Fife, there's so for some years there's been a memorandum of understanding. For many years there's been memorandum of understanding with Lothian Pension Fund to kind of to work together to save money and resource, and that, as we've seen in the investment costs, as borne results. And over the last few years we've been looking at things like procurement as well, where we can, rather than us all doing separate procurement exercises, producing similar documentation, interviewing or reviewing similar submissions, we're trying to look at that in a more efficient manner. And I think the whole of the LGPS is looking at that sort of thing, or should be looking at that sort of thing as well, and how far you can take it. That's a boundary, but there is a memorandum of understanding, a letter of engagement with Lothian, which we're currently reviewing and refreshing because that hasn't been updated for some time. But there's the letter of engagement, which helps us look at how they're managing our money, but then also the memorandum of understanding, which looks at other aspects where we could maybe benefit from working jointly together.
Okay.
Thank you. I'll just maybe add a little bit to that last point around the relationship with LPF. I know you asked about sort of how far we could take it. So I suppose maybe just to kind of go back to how we're structured is that obviously the pensions committee makes the decision on the strategic asset allocation, which is then delegated to me to implement. And the key thing for that is that I need to take proper advice to make those decisions. We have our joint investment forum where the three funds, Fife, Falkirk and Lothian, are represented. They are supported by 2 independent advisors who review the performance of the fund managers we have, the mandates we have, but they also look at sort of discuss the recommendations that are coming out from the strategic asset allocation group, because as you know, we have ranges that we can work within and look at sort of the macro environment trends and just sort of give us advice related to that. So there's hopefully, and as you know, each quarterly meeting there's a report comes to the committee and board from that joint investment forum to give you some reassurance over what we've discussed and what we have had a look at. I think maybe, and Debbie touched on it, and it's in the report at paragraph 5.4, there is a lot of work happening nationally to look at the sort of sustainable future for LGPS, and I think that's sort of recognising the work that's happened down in England around pooling and things like that, and sort of saying, well, what if we could influence a model that we thought worked well in Scotland, what could that look like? And so we had an event in last March, and we've had an event just earlier this month with the 11 funds represented to look at sort of what could our vision be of how we could work better together. Now, the proposal is that all the funds will bring something back to committee for consideration that sets out a proposal for how we may work better together. As Debbie talked about, probably the focus of that is around investment areas and maybe to some extent training and procurement. There was discussion at the session about, did we want to consider other areas, for example, software or administration, but kind of recognising those are difficult areas to look at. So there will be something that will come to a meeting, I would assume this calendar year, that discusses that collaborative vision that's set out in paragraph 5.4.3.
Is that okay, Mr. Whitty? Thank you.
Yes, thank you.
Councillor Hannah, got a question.
Thank you. You've just answered one of the questions I had, so thank you. In terms of the assessment that we all did, I'm incredibly impressed that the overall average was 77%, and I can only assume that some people got 90 and 100 because I know that I couldn't have been anywhere near up there. Are there any plans to give feedback on the outcome and to look at the future training? Because I mean, I have to say I was fairly certain that I was struggling on answering some of the questions, and it does seem to me that you need to look at the training that's required as a result of where there were mistakes. I may be wrong, but I don't think so.
Yeah, feedback was supplied. I'm just looking at I've started looking at my outbox just in case I've not, or drafts, I should say, just in case I have got some in there. I'll check that, but I did draft up with a response to everybody somewhere later than others. There's a board member who's on who knows what I'm talking about because they flagged to me that they hadn't had their response yet. So I was going to pick it up. So I've looked through, but I've kind of got a suspicion it's sitting in my drafts folder. So I will get that sent out. Nobody got 100%. One person did get very close. Nobody got less than 50%. I don't think actually anybody got less than 60% from memory. So it was a little bit of, yes, it was a plus and minus, but the average was a good midpoint. And yeah, it was. I was actually very impressed. I said the only one where nobody got it right was the question over when is the outturn presented. In the grand scheme of things, that's not a major. It's not. Yeah, it's not a risk. Okay.
Thank you. The other question I had was about the members portal. Would it be possible for us to have a demonstration at some point? Is that planned, or is that not necessary? It's just, it would be useful to understand how it operates.
We actually did demonstrate the portal when Susan was here, but we did have problems, technical problems, so that could be why you're not necessarily viewing it all. But what we could do is we could look to revisit that, or we could have a little kind of like a surgery if members wanted to actually log on. We could probably do a session whereby we could kind of like do a little bit of hand holding and help people get on, because to be honest, it is, there's a them and us divide here, I'm afraid, and it is a system issue that I can't get round. But from a employee perspective, so from a board perspective, they're going to be able to go in and see their retirement modelers. It's going to be very informative, very helpful. From a councillor perspective, those calculations don't exist. So but you can still go in and update nomination forms, things like that. So there are still things you can do on there. And from a pensioner perspective, you can download your pay slips, your P60, those kind of things. So we could do a little surgery to show if people thought there was merit in that.
Yeah, I was aware that we had a session when it was not live, but my recollection was that it wasn't incredibly helpful. So yes, I think it would be useful, because although it's not a very frequent question from constituents and so on, it does happen. Constituents raise pension issues, and it would be valuable to at least have an understanding. I don't want to understand all the nuts and bolts, just an overview. Thank you.
Thank you. Any more questions? I do have a question as well. Well, more an observation, Catherine. You said that, and maybe you understand the reason why more than me, obviously, because you got all the returns for the test. You said that 10 of the board completed it, only 5 members of the committee completed it. That was half of the committee. Do you know maybe why there was only that amount of members of the committee that completed the test, the annual test that you send out this year? Could it be a time? As you know, I'm just thinking, if all the boards managed to complete it, not that I want to chastise anybody, certainly don't, by the way, and only obviously 5 of us, and it's very important because, I see pensions business is really quite complex and very professional, and there's a lot of information, a lot of data that we're trying to take in, or if there's any way that we can maybe find a way to encourage the members of the committee to complete it, really. It's part of my question.
If I maybe just jump in, I mean, I guess from our point of view, we are not entirely sure why people haven't managed to complete it, albeit we know that everyone's got an incredibly busy role, board and committee. One of the audit recommendations, if I recall, was for me to send out a reminder because of the low completion rate last year, and I did send out that reminder. If committee members have got a sort of a reason that they're not able to commit to complete the questionnaire or a challenge, if they flag that to us, we can see what we can do to support them through it. But I would just reiterate what we've said before, that as you've said, pensions is a hugely complicated area. It's really important that we try and make sure our training, just as Councillor Hannah said, is responding to the needs and the asks of the committee. But if we don't have that knowledge questionnaire, we don't know what those needs and asks are. So if there is a specific issue that's stopping people from completing the questionnaire, if they get in touch with us, that would be helpful.
Appreciate that answer, Amanda. That was really very, very helpful. I do have some units from Enlightenment that I need to inform you about, Catherine, that I have completed. I try to do that kind of in my spare time, but my spare time is little right enough. But for me, time can be an issue sometimes. But I try my best, and I think we all try our best. The other question I had actually on this was, I mean, you said it was hard to find experienced pension administrators. I was just wondering, only a suggestion, obviously, is there any way maybe, you know, it's a very professional occupation, and obviously there's a lot of qualifications behind it, I would imagine. So maybe at the beginning you're testing yourself quite a lot to get a qualification sitting test. It's maybe taking on apprenticeships, you know, a couple of young, because it's a new profession and it's quite unusual being a specific administrator only to do with pensions. Is maybe that a thought that's possible for the future, or maybe not necessary for some reason?
It is a potential for the future, but to introduce an apprenticeship will take a lot of time, and that's potentially one of the barriers. The reason I say potentially is because we have just the age profile of the team has changed dramatically because the older cohort has dropped off and a newer cohort is coming through. It's not that we only recruit from one age group, but so we still keep a range of ages, but actually we've got a lot. Well, we've got 3 members in their early 20s now. So, and the ones who are older are probably 40s. So we're not looking at, and we generally don't have a huge turnover of staff leaving by resignation. It's usually, it's hire to retire that we've been experiencing. So apprenticeship may be something, but as I said, it takes time. It's not something we've excluded. That's part of the reason why we were thinking about the clerical assistant, because that's kind of like that stepping stone, that apprenticeship, but not actually an apprenticeship. It's something we could do quickly, but also address that apprenticeship angle.
Thank you, Catherine. Amanda, do you have something to say?
Yeah, I suppose just to flag that, as Catherine said earlier in her presentation, we are looking at that sort of grow your own approach. And so maybe just to flag that we've got 4 people going through exams right now who are all progressing particularly well. So we are actively trying to encourage that training and development within the team. So it was just to give some reassurance on that point.
Thank you. So if we've got no more questions, we'll move on to the recommendations. It's recommended that committee and board note the work undertaken and developments arising since the last report to the committee and board. 2, note the proposed plan for outstanding work in the fund's business plan for the remainder of 25-26. Do we agree that?
Agreed.
That's lovely. Thank you. So we'll now move on to agenda item 8, and it's investment review. And I believe we have Albert on the call, do we? Yes, we do have Albert. If you could take that review, Albert, thank you.
Great, thank you, convener. So just going straight into the market review for the past quarter, we note at 3.1.1, global equities advanced in the final quarter of 2025. The global equity index rose by 3.4% in sterling terms. At 3.1.2, we talk about some of the major sectors that performed very strongly. This was characterized by more traditional value-oriented sectors, such as materials and financials, performing very strongly. In bond markets, rates were marginally lower, so government bonds delivered positive returns. At 3.1.5, we note that the conflict in the Middle East has escalated. It's too early to assess the long-term impact. However, we can broadly conclude that threats to energy supplies will be negative or inflationary going forwards. Going over the page to 3.2.4, the table there shows the policy group allocations over the past 12 months on a quarterly basis. In the middle of that table, we can see the change from the end of September 2025 to end of December 2025. As you look down those numbers, you'll see there's not a great deal of change over the quarter. The main thing we would note is there's been a slight increase in the cash allocation from 4.9 to 5.6. That's as a result of cash being swept from equities and also cash coming out of the real assets policy group. At the very right of the table, you can see the position as at end of December, the differences between the actual allocations and the long-term strategy allocations. Those differences are broadly unchanged from the previous quarter, so a slight overweight to equities, as well as underweights to real assets and credit, broadly in line for sovereign bonds, and an overweight to cash. At 3.2.5, we talk about additional activity that has taken place following the end of the quarter, in light of the equities performance being quite strong and being overweight relative to equities. There was a reduction of approximately of £100 million, which has increased the cash policy group allocation. In terms of the returns from the fund, we note these at 3.3.3. The fund returned 4 percentage points over Q4, ahead of the benchmark return of 3.4%. The main contributor to the outperformance over the quarter was the performance of the equities, and the fund's value-oriented equities, which include Schroders UK, the LPFI Global High Dividend Mandate, and LNG Fundamental Equity Mandate, contributed to the equities delivering a return just shy of 5%, ahead of the equity benchmark return of 3.1%. Looking now at the long-term returns at 3.3.5, the fund has delivered a return of 7.6% per annum since September 2001. This is ahead of the benchmark return of 6.7%. And over the 5-year period, the fund has returned 7.7% compared with the benchmark return of 3.2%. Over this 5-year period, the fund has benefited from strong equity and infrastructure returns, while UK government bond returns have been negative. That was all I was going to say in relation to the paper. Happy to stop there and take any questions or comments.
Thank you, Albert. I'll now open it up if anybody's got any questions at all for you. Mr. Whitty, thank you.
Thank you. Thanks, Albert, for that. A general question: when does you say that the current conflict in the Middle East, it's too early to say the long-term impact? At what point does a short-term, if it is a short-term issue, start to impact, and you do need to start seeing the long-term implication and take action? I appreciate it's not straightforward. There was an interesting report at the weekend that Iran is actually making more money now out of its oil than it was before the war. So the financial implications don't always follow logical trajectories, I suppose. But yeah, when does something start impacting on the longer term like that? And is our exposure as a fund simply the overall general risk of inflation and higher energy costs, or have we got any more specific exposure in that area because of our investments? Thanks, convener.
Thank you.
Yes, it's a pretty broad question, so I'll try and answer that as best as I can. I suppose in terms of the short-term impact, it would be fair to say that you already have seen some short-term impact in terms of markets. So you have already seen energy prices spike. You have also seen an impact in terms of different sectors in the equity market perform very differently. So just by way of example, as you might have expected, a lot of energy company share prices have escalated, have gone up because the price of energy has gone up, and the price of defense stocks have also risen. Now, on the other side, what you have seen is because energy is an input pretty much into the production of all other things, because the cost of everything else is going up, then you have seen in some cases a negative impact in terms of other parts of the equity market. Secondly, in government bonds, you have also seen an impact there in terms of higher inflation is already being projected, and because of that, rates have already started to move a little bit higher, and also the outlook for in terms of what government central banks will do. Previously, they were talking about potentially reducing rates because there may be higher inflation coming through. The expectation is that rates may stay a bit more elevated for longer. So these are all immediate impacts that we have already observed in the markets. I suppose your question is maybe more around, okay, how does that feed into the long-term thinking about what we think about strategy? I suppose what I would say there is that because events can be quite uncertain and we aren't really in the business of making short-term predictions, I think the short answer is there isn't anything necessarily to do just now. So the way in which the fund is currently set up is you are already diversified across different types of assets, and so there isn't an immediate need for any type of knee-jerk reaction to say, oh, this has happened, so we're suddenly going to change things. So the long-term strategy remains in place. As opposed to when would you start to think about making a change to the long-term strategy, we will be reviewing that. The fund will be reviewing that just by virtue of the current valuation cycle that you're going through. There is an investment strategy review that will also be taking place, and that will take into account, I suppose, long-term projections for what we think will happen to the fund over the course of the next 10 to 20 years. So that's the period of time over which we're setting strategy. So the short answer is no short-term change just now. We will be looking at long-term strategy as part of the valuation cycle.
Thank you.
Thank you, Mr. Ritchie. Mr. Davis, you've got a question?
I have. Thank you, Mr. Chen. I'm on record before as expressing concern that the Appendix 1, the performance of returns is measured gross. I think this is highly misleading. And I've asked before that we could have net returns, and particularly I'm looking at the private equity multi-manager returns where you're 8.1% below the benchmark. Obviously, that's gross. We know that fees on private equity are high, to put it mildly. I mean, it's basically a sort of rent-seeking exercise. So I think if we had a net return data, it would be much more realistic and give us a much better appreciation of the costs involved in these different assets. So I'd like you to address that. Can you give us commitments as to when you might be able to give us net returns? And secondly, you talk about the short-term impacts of the war. It's quite clear that this war is hugely expensive, and combined with the pressure that the President of the United States is putting on the Federal Reserve boasts in legal actions against Governor Powell and the actions against Lisa Cook, that in my experience of 40 years in financial markets, never before have I seen direct pressure on the Federal Reserve by the President of the United States to reduce interest rates, which has highly inflationary consequences and obviously very negative impacts for sovereign bonds. So I would question when you like to review, you might review your allocation to sovereign debt.
Thank you for those questions. To take the first part of that around the netted fees returns, I'm aware that that issue has been raised in the past, and I think the funds officers had provided a response around some of the challenges of getting those fees on a timely basis, and so that is the reason why they are currently still reported gross of fees. As something that we can hope that potentially addresses that, if you refer to paragraph 3.3.11, that refers to that particular point about the returns being gross of fees. There is a separate exercise that is carried out on an annual basis that looks at the fund's overall investment costs. And so there is detail there at the fund level that shows what the aggregate cost is and how that has come down over time. So in that paragraph, we talk about the 5-year average to the end of March 2024 has been 0.59%. And the most recent results to the end of March 2025 are 0.43%. So you can use that to apply those costs at the fund level returns. I appreciate you don't have that at the individual mandate level. That's something perhaps we can discuss with the fund officers and come back to you next time. And just one other point on the private equity returns being below benchmark, that particular mandate is now only 0.3% of the fund assets, so it's not material. It is in runoff, and so those returns are not reflective of what you would expect of a typical sort of mandate, because those are the residual assets that are in runoff. Okay, so I'll leave that point there about the fees. On your second point about, I suppose, political interference, particularly in the US, on the Federal Reserve, yes, absolutely take those points. The thing to bear in mind is that your sovereign bonds are now primarily invested in UK index-linked gilts. And so those effectively act as a different type of asset relative to the other assets that you have. And so as a proportion of your overall fund strategy, they represent around 15% of fund assets. So you have 85% of the fund that is invested in something different. And so that 15%, we think, just as a broad allocation, is sort of reasonable. It's reasonable to have that sort of allocation to sovereign bonds. So completely take the point that there is pressure on central banks, probably not just in the US, but in other parts of the world as well. But we think it still makes sense to have that as a different asset class and asset class allocation that behaves differently to and will be driven by different factors to the rest of the assets. Having said that, again, I would raise the point that we are in the process of the fund will be undertaking an investment strategy review, which will be commencing, pretty much in the latter half of this year. So that allocation will also be looked at along with the broader portfolio and fund strategy at that time.
Thank you, Mr. Chain. Mr. Davis, okay. Thank you. I'll move on to Councillor Hannah now.
Thank you, Convener. just a simple question. At 3.3.1, there's reference to Chief Finance Officer reviewing the rates of return achieved by the fund at a meeting on March 4th. I just wondered if there is any update on that position, since this is 4 weeks later. I know it's because of the lag in terms of the reports being prepared and then getting out.
If I maybe just say initially, so the obviously the joint investment paper is sitting at as a private paper at the back of the report, so that will cover off what was discussed on the 4th of March.
Right.
I have to say that I actually didn't manage to attend that session because we had the budget the next day. So Debbie and Alistair attended on behalf of Falkirk Council. I don't know if Albert wants. We have seen some impact on our equities, some short-term impact on our equities as a result of what's happening in the Middle East. But I don't know if Albert wants to say anything else about just what's happened in the last 4 weeks.
Okay.
Yeah, so nothing really further to add to the general comments that I made earlier. Thank you.
Fine. Okay, thank you.
Thank you, Councillor Hannah. Debbie wishes to speak.
No, I was just going to say, Justina kindly provided me with the information just to say about the fund value sitting as of Friday about 3.9 billion. So it's about a drop of 100 million since in peak times when we were topping 4 billion, or close to 4 billion. So that's the sort of effect that that's had over a short-term period of time. But I think that reflects a balanced, diverse portfolio. So some things will have gone up and others will have gone down.
Mm-hmm. Okay, thank you very much.
Thank you. I've got a question, Mr. Chair. I mean, I think it's on all our minds, and possibly you can't answer it because it's a big question. But it could be a big material change, and I really just want some reassurance because we're all thinking about the Middle East at the moment. You maybe don't want to discuss that. Maybe discuss that more in private papers. But obviously, if more countries get involved in the Middle East, that would be a big change. So you monitor, obviously, your investments, but do you have some big contingency plan if something like that was going to happen? Because that definitely would affect, don't know, good or bad, but a lot of our investments. What I mean is, like, would you be meeting? And I know you monitor it regular, but would it be a sort of crisis meeting if something like that happened?
To your specific scenario of other countries being involved in the conflict, I think we would think about whether we would need to have a meeting, because it's not immediately obvious what the I suppose in terms of the asset class and the policy group impacts will be. So we can certainly, I think, all agree that wouldn't be good for the world economy, as in an escalated broader conflict and what that might mean. But it wouldn't be something that we would think would materially necessarily impact the long-term strategy. So I think we should always bear in mind that when these geopolitical events happen, it is very easy at the time to be quite focused on whether there is some immediate action that could be taken. However, because the events and how they develop will be very uncertain, it's not necessarily possible from a strategic perspective to say, okay, we're going to reduce equities, for example, by 10% because we think for the next 10 years, right? So you need to think about, are you making a decision on a very, very short-term tactical basis saying, oh, I can predict what's going to happen to equities over the 6 months? And I'll be honest with you, I absolutely cannot. And so in the same way that you might be concerned actually that things could deteriorate further, by the same token, there is also the possibility that things actually resolve. So on the flip side, we could be sitting here in 6 months and going, oh, we knew that this would drag on and that things would, escalate, etc. But there is another version of the world where actually we're sitting here in 6 months and actually, because of the midterm elections coming up and Trump wanting to sort things out, that actually some negotiation or a ceasefire is attacked. So the main thing I would highlight that it is uncertain, and so it is difficult to make any sort of material long-term strategy changes as opposed to making tactical changes. So we aren't really in the business of making short-term tactical recommendations. The fund is really a long-term investment vehicle. And so I think the short answer is we would be highly unlikely to make any short-term tactical decisions in terms of the fund. That isn't to say that there isn't a scenario where things could happen, but it isn't likely to be the case in the near term.
Thank you, Mr. Chen. That was reassuring. I think what I meant was, we are aware, which you will be aware, in the business of being aware, of any potential big changes, material changes in the world. And you've explained that, and I do understand you haven't got a crystal ball, but what I was really thinking about, well, it's hypothetical, if it was a world war, I do think that would probably affect a lot of things in the world at that time. But I do appreciate your answer. Thank you so much.
Thank you.
So we have no more questions, no? So I'm going to continue to the recommendations. The committee and board are asked to note for the period 31st of December 25, the recent investment market developments, 2, the fund's strategic allocation and current positioning, and 3, the fund's performance. Do we agree? Thank you. I'm going to move on now to agenda item 9, engagement and voting activity, and that will be taken by Debbie McRae. Thank you.
Thank you, Convener. This paper is the standard quarterly report that looks at the voting and engagement activity provided by Hermes EOS for Q4 of 2025. As noted in the list of background papers, a highlights report is uploaded to the SharePoint portal, excuse me, and this highlights report should be considered confidential. Please remember to look at these papers as they provide background as to what Hermes EOS is doing on our behalf. I'll also add to that at a recent meeting to discuss risk with the board chair and chair designate, there was a suggestion that we maybe try and provide a link again for MD that's struggling to get into the SharePoint portal. I have tested that out and it wasn't very successful, so we're still working on that part of it, so we can maybe do something in the invite to the meeting. But in the meantime, if MD's got any problems getting into SharePoint portal, please let myself or Catherine know. Section 3.5 to 3.1 of the paper sets out the Hermes EOS approach to responsible investment through engagement, and this is the approach that the pension fund has adopted. Section 3.12 highlights that Hermes EOS engaged with 79 companies on 329 issues and objectives. Again, detail on these engagements are included in the highlights report. In addition, paragraph 3.15 and 3.16 note that engagement reports from the Local Authority Pension Fund Forum and ESG reports from Schroders and Legal and General are also in the SharePoint portal. Indeed, the impact report from Pictet was also received after the report was written, so I did also upload that too. The outline voting position is set out in section 3.17 to 3.19, and the report also notes a co-filing that we undertook in the quarter for Shell and BP. There are no significant issues to draw to the attention of the committee and board, but I'm happy to take any questions.
I'm opening it up for questions. Has anybody got any questions? Councillor Spears.
The role of chair and chair designate, could you further expand on that a bit? I'm not getting quite what's happening here. It's saying yearly basis and
It's yes, on so this is to do with the board constitution, which, as it happens, there's to be further discussion that Catherine will outline in the next paper, Councillor Spears.
Okay, Councillor Spears, we'll discuss it in the next agenda item. Thank you. Any more questions at all? I don't see any hands up, so we'll move swiftly on again. Thank you. So this is now to agenda item 10, which is the review of the Pension Board Constitution, and Catherine Crothers will take this report.
Thank you, Convener. The Pension Board provides an oversight function, and while not a decision-making group, they do ratify or not, as the case may be, the decisions made by the Pensions Committee. The Pension Board Constitution was last reviewed in 2019, and it has become apparent that the Board's ability to ratify a decision of the committee may at times require them to meet as a group to discuss the decision-making process that they've witnessed. Until now, the reports being considered and background papers have been sufficient to allow the Board enough insight ahead of a joint meeting of the committee and board to determine if a decision should be ratified. However, this is not always the case. For example, when a motion is brought or revised or voted on at a meeting, the board might want to discuss further whether they want to ratify or not, as the case may be. The revised constitution allows for the board to meet to discuss matters where they feel this would be beneficial. This is in keeping with other LGPS funds where the board does meet separately afterwards to discuss and document their position. The costs of running these meetings will be met by the fund because the board is a fund appointed board rather than the committee, which is a delegation from the council. To build on the question that we had earlier about the role of the chair and the chair designate, the structure of the board is prescribed by regulations. You must have equal numbers of member representatives and employer representatives. The member representatives are appointed by trade unions. The scheme manager chose that the trade union representatives would be 2 from Unison, 1 from Unite and 1 from GMB. That was to reflect the makeup of the union membership within the councils. Each side, I'm going to say side, they're not really a side, but the member representatives and the employer representatives each appoint a chair. And the regulations require that the chair rotates from one side to the other on an annual basis. For continuity purposes, we have set it out such that whoever is the chair one year becomes the chair designate the next year. And that gives continuity. It means the chair and the chair designate are always looped in so that it gives a better oversight function. I hope that explains. If anybody's got any other questions, please do raise them.
I'm opening it up for questions. I don't see any lights on. Sorry. Mr. Whitty.
Thank you, Convener. It makes sense what you're suggesting, particularly if it's also in line with other ways that other funds operate. Yeah, Regulation 9 seems to be where there's maybe needing more time to look at something that the committee's discussing and deciding, and maybe there's a different view that the board have. So I wasn't sure how that new power to be able to meet separately, which I agree with, how that links or does it with the whole section 6 about dispute resolution. or am I mixing two things up here? Because if the board is seeking to meet because it's not sure of a decision and to give its advice and input into it, is that, at what point is it taken through section 5, and at what point is it a dispute resolution with the committee under section 6? Thanks.
Okay, so I take it you're talking about section 5 and section 6 of the Constitution?
Yes.
The Constitution.
Yeah, sorry, yeah, for
No,
clarity,
that's
the
okay.
Constitution, yes, yeah.
So just key myself into that, which is the meetings and yeah, the dispute resolution. So the ability, the ability to meet is to enable. So for example, we had a meeting last year where we had a motion. We've never had that before. The motion was quite involved, and board members didn't require in that instance time to discuss, but they may have required time to discuss whether they wanted to ratify the decision of the committee. There are statutory bases on which the board can disagree and refer a decision back to the committee for the committee to re-review. It's not the board saying this is our decision, it's more a board saying we think you need to you need to take further advice before reaching a decision, or you should, because you haven't taken into account all of the factors you need to, or some other cause, but they are prescribed in the regulations as to what those bases are that you can refer a decision back. The dispute resolution procedure is actually governed by Scottish Government, and it sits outside of the board constitution. But what we're trying to achieve here is the meetings for the board in which the board could say, right, we want to go to, to refer a decision back, which then links to that dispute resolution, which ultimately is, if we cannot get to a resolved position, if it's just a case of ping pong, committee bat it back, board say, no, we want you to refer, committee make a decision, and board go, no, we still think you need to do it, and it goes referring. There is an ultimate resolution procedure that's governed by Scottish Government.
Okay.
Thank you, Catherine.
Okay. Thank you.
Yeah. Thank you. Do we have any more questions? We have Councillor Spears. Thank you.
Fair back to the role of chair and chair designate. The question is, could we have a bit further detail here regarding this? Is talking about yearly changes and things like that. I'm not quite following what's in the Appendix 1.
Okay, so as explained, the regulations require the board to be constructed of member representatives and employer representatives. The member representatives have to appoint a chair, so do the employer, and it's got to be from their side. So we will have one member representative chair, who happens to be Tony Cleary at this point in time, and one employer representative chair, who happens to be Ross McKenzie. They can't chair at the same time, so the regulations say to continue that parity, that equal representation, the chair must move from one side to the other. So 1 year, and in this year it is Ross McKenzie who is the chair of the board. In June, that will switch over to Tony Cleary, who will chair the board going forward. Does that make sense?
Is that okay, Councillor Spears? Right, thank you. Do we have any more questions at all? No? Will we move on to the recommendations? Just for correctness, because I just realised I never got you to agree the recommendations for agenda item 9. So can we agree them, and also agenda item 10, with the recommendation for this one. It's recommended that the Pension Committee consider and approve the revised constitution of the Pensions Board. You'll be pleased to hear that now I'm going to read out agenda item 11 for members of the public to explain to them the reasons why we do that. And then after that, we're going to have a short break for, say, 15 minutes. Actually, sit in front. So agenda item 11, exclusion of the public, if so resolved in terms of, quite technical, in terms of section 50A4 of the Local Government Scotland Act 1973, exclude from the meeting the press and the public for the following items of business on the grounds that they involve the likely disclosure of exempt information as defined in paragraph 9 of part 1 of schedule 7A of the said act. So after that, we're going to turn off for the public online, and now you can take a 15-minute break, and if you could come back after that, that would be good. Thank you. Oh, sorry, do you agree?
Agree.
Okay, sorry.